Alpha Fam, Coach Jam here with another market update. Before we begin, I do want to say that nothing in these videos is financial advice. Everything's for educational purposes only. It's just my own analysis on the market. Also, if you're new to the Alpha Syndicate channel, if you could please give us a like, comment, and a subscribe, we really do appreciate the support. So let's get into the market, guys. So we're starting to get a pushback up on Bitcoin. This has been a very crazy market, guys. Not only we're getting a pushback on Bitcoin, I think there's a couple reasons for it. One, Trump has made a couple of announcements. One of them saying, don't panic, that oil is going to be solved and that the cost of oil is going to come down and that they're going to solve this problem. And as soon as he did this, guys, look at this oil chart. It is insane. I mean, it was crazy. Oil spiked when futures opened up almost to 120, and then at the peak to the drop, it dropped 31%, a little over 31%. It has started to do a little bit of a bounce and recovery now, but this is insane, guys. All right, this is really insane. And then from this, hoping and looking at this, guys, is I think we see oil continue to kind of trend back down. All right, obviously, if there's some type of announcements or something that crazy happens, we can maybe expect it to spike back up. But everybody has to understand, why do you think Trump took the oil from Venezuela right before this happened? Think about it. Do you think he was prepared for this? Of course he was. Trump is not a stupid person, guys. He understands and knows what he's doing before he does it. And obviously, this isn't a political channel, so I don't get into politics. Obviously, one thing that we've been hearing a lot of people be upset with Trump about is he did promise no new wars, and then this is the whole issue with Iran and then going into Venezuela. But removing ourselves from that, I think Trump understands and knows what he's doing. So not only are we starting to get a pushback up on Bitcoin, which looks pretty good. We're back above on the 4-hour, right above the 50-day. We've used it as support. Now we're doing this push up. You can see the first time we came up to it on the daily, we rejected, and I expected us to do that, guys. Just simply, first time we've come up in over 40-something days. You can actually expect this to be a major level of resistance, especially it's a pretty psychological level too, because $76 to $74,000, $75,000 level. So what I would like to see is this. I still am in the camp that I think we're in this accumulation range. All right. Obviously, this can change depending or not, with price action and different things. But what we would like to see picture perfect would be us to break above the 50, hold it as support, and start making a new uptrend. Do I think that happens now? Probably not. The reason why? We're still in a very volatile situation, guys. At any time, some type of crazy announcement comes out, and then it nukes the market back down. That's the reason why these accumulations usually take so long for us to kind of work our way out of them, is because there usually is some FUD on the back end that continues to drag us back down. All right, and why we can't seem to break out. And this is the same thing we've seen during the tariff stuff, guys. Every time we start to break out some type of announcement, some more trade war stuff would come out, and then the markets would nuke. And then every time we start to move above the 50-day, everybody gets excited, and every time we come back below it, everybody gets upset and says we're going back down to zero. This is just what happens during these bear markets and in these accumulation ranges, guys. So just play it very stoic. Keep with your plan. Make sure you understand what's going on. Every time we come to the bottom of the range, these are your DCA points. Every time, and this is the reason why I still say put limit orders, because we are still going to expect at some point, guys, what I would expect is them to do a spring in this accumulation range. All right. And we know what the spring is, guys. We've been talking about it for months now. I mean, the spring comes where it's a deviation out of the trading range, usually driven by some type of really big macro FUD event. Some type of narrative gets, passed around. This causes the event. And again, price makes narrative. So the price, and this is already going to occur regardless of the narrative, but this is what market makers do. They use these narratives to hide behind, to force prices down, to sweep liquidity, kill out all the longs, create a spring, create a panic. And then once this occurs, we're looking for that retest. And once we get it, guys, you can almost bet your bottom dollar that we're going to start the new uptrend. All right. Bear markets only tend to last about a year, guys. Seriously, they only tend to last about a year. So if you look at this from where our local top was, and if you measure out a year, and you kind of come over here where the year would be, look, it's not that far away, guys. I'm serious. Look right here. Come over here. Let's do 350 days. This is on average what they last. This brings us into September, guys. September, October, Q4. So look at this right here. If you know that they last typically a year, and you've got a buy box, you put it all the way into here. This is your buy box. And as long as you're in your buy box, guys, You do whatever you can do to accumulate blue chip assets that solve TradFi problems and really narrow and hyper focus your portfolio down on things that literally check that box. If it doesn't check that box, guys, this isn't the time to take on unnecessary risk or to be like going into like really low micro cap tokens. You know what I mean? Even though if they're in a really good narrative, there is going to be a time and a place for that, guys. The rotational trade will be happening. What I mean by that is, for example, let's use Solana. So I like Solana. I'm bullish on Solana. Super bullish on their ecosystem. Well, what I would expect is when the next bull market happens and we start to break out, these things like Solana and Sui, these big L1s that are really, really focal for solving these problems for TradFi, they're usually going to run first. And after they run, that rotation happens into their ecosystems. So you can take advantage of these moves as they happen first. And then once you do that, you sell, then you can rotate into projects that are inside of that ecosystem. So for example, and I'm not saying this is not financial advice, I'm not saying go buy Radium, but like for instance, if you like Radium, I like Radium. I think Radium's a great project. I think it's very focal in what it does, the problems that it solves, and helps assist for Solana. What I would be looking to do is take advantage of the Solana pump first and then rotating those profits into something in their ecosystems that I like for example, Radium, or let's say like Sui and Deepbook. You know what I mean? Like there's every ecosystem is going to have their projects that really support and help that ecosystem run, and you're going to see that rotation happen, guys. All right, so take advantage right now, and this also gives you the best of both worlds because these are blue chip assets. You know they're not going anywhere. So even if it does take longer for these things to break out of their bear market lows, doesn't matter. These things aren't going anywhere. All right. This is I tell this to guys in my community all the time. If you're holding something, guys, and this is like a really good test to know if you're holding something that is something that you actually want to hold, is if you had to go into a coma, would you feel comfortable holding that project for the next 5 years? If you can't say yes 100% off the top of your head, like you have 100% conviction in that, probably shouldn't be holding it, guys. Rotate. Get out of the things that are showing weakness or you don't have confidence in, even if you're at a loss, and rotate that into something with strength and something that you feel comfortable holding, guys. All right. So with that being said, we always want to look at the TradFi markets, guys. So it's kind of strange because yesterday we had a really good day on most of the TradFi stuff. And obviously when you have something like this is futures for S&P 500, this thing bounced almost 3% yesterday, guys. All right. So when you have something that bounces 3%, expect a little bit of red or a little bit of a retracement the next day. But you can see we've had a nice move up. You can actually see this is futures for S&P 500. It's made a nice move up. It did peek its head back above the 50. And I've said this several times. We need these things to start showing some strength, because if they don't, going back over to the Wyckoff, guys, these are going to make me feel like this is the next outcome for a lot of these TradFi stuff, guys. So like the S&P 500, NASDAQ, these things are all displaying the same thing, which is they've had this move up from the tariff FUD. All right, this was the tariff FUD. This was the pullback from the tariffs. These things have been basically moving up since April, guys. I mean, they've been moving up for a very long time. To see something go through a corrective after moving up, these things have been going for about a year now, is totally the realm of possibilities, especially when you have a war going on. All right. So keep that in the back of your mind, where I wouldn't get super, super excited because we've had a couple of really good days, and I'm not trying to sound bearish, but I wouldn't get super excited because at the end of the day, if the stock market goes through a broader correction, it's going to bring crypto down with it. All right. And the last thing we want to see is this thing drift down. And I've said this thing several times over the last few days. And what do we keep seeing, guys? We keep showing bearish patterns, higher lows and lower highs, guys, lower lows. This is not something that you see in a bullish structure. We want to see higher highs, higher highs, higher highs, higher lows, higher lows, higher lows. That's what we want to see. We're getting the opposite. Now, equally, sometimes this is definitely 100% the case, where these things start to kind of drift down like this and they start making these kind of these bull flags, and these things will break up and still continue to make higher highs. Just after a little bit of time where it starts to show a little bit of weakness, where it kind of displays some of these rolling over patterns. I'm not saying that either one of these are going to happen yet. I'm watching these closely because I will say this. Regardless, if there's like some announcement that the war's over and there's been like some surrender, expect a massive green candle to the upside. All right. Just, you can expect it, guys, because whenever this happens, this is going to make everybody very excited, and I can see the risk on appetite coming immediately back into the market, guys. All right. So with that being said, looking at NASDAQ, it had a really good day yesterday. You can see it's right now, this is on the daily, it's battling to try to get back above the 50, guys. You can see how the 50 was being used as support all this time. Well, now look what it's doing. It's being used as resistance. And this is, like I keep saying, we need this thing to break back above, hold as support, and start making higher highs. And in the environment with the war going on, it's going to be kind of hard to see that happening right now. I'm not saying it's impossible. And again, like I just said, if they end the war, expect a big, massive candle to the upside, guys. But until then, these are both definitely showing me a little bit of concern and definitely showing some weakness. All right, guys. But again, taking it one day at a time, watching things very, very closely. Still doesn't go back into, guys, I keep talking about this, guys. We are in quantitative easing. They are doing QE. It is here. Unemployment just went up, all right? Where it's been going down and trending down, unemployment just went up. Very interested, because we have the Fed meeting next week on the 18th. Very interested to see what happens during it. I don't think we get rate cuts. I wouldn't even hold your breath for rate cuts. But what I would be looking for is some direction to see what the Fed, how they're reacting, what they think about the war, and just overall their stance moving forward. We know Jerome Powell's being replaced very soon. Jerome Powell has only 2-3 months left, all right? And this is why I say April is an area or a month that I'm looking for us to start breaking out, because I think as we get closer to Jerome Powell getting replaced and Kevin Warsh taking over, I think the markets are going to start pricing that in. I think that's going to make the markets go risk on, because they're going to be expecting Trump's new guy to come in there and cut rates and to do all the things that Trump's been pushing, trying to get Jerome Powell to do. All right. This is also on the back of quantitative easing. All right. This is also kind of crazy too, because even the PPI and all of this stuff has been way better than people have expected. All right. So that's why I said there's a lot of this bullish data going on, guys. It's like these two sides here that are kind of combatant. You got bullish stuff like, for instance, we got the ISM that's well over 50. You've got QE. You've got Jerome Powell being replaced. But then on the other side, you've got a war. You know what I mean? You got Trump over in Iran. That's massively bearish for any market, is a war. But they're usually just bearish in the beginning. All right. If you go back to any war that we've ever been in, it always has a really negative reaction at first, but by the end of the year, usually the markets are making new all-time highs. All right, guys? So with that being said, watching these things very closely, it's kind of crazy looking at Bitcoin dominance. It's done something that's been a little unusual. It's been kind of spiking up and down. You can see it made this move back down. Now it's making a move back up. Obviously, Bitcoin's performed really well over the last few days, so this is not unusual to see. As long as it doesn't break above this on the weekly, and you guys know I always talk about Bitcoin dominance. It's been below this literally since August. As long as it doesn't break above this, it can do all the bearish retest it wants. What we would expect is maybe a come up, a bearish retest, or maybe it doesn't, and it starts to kind of roll back down. All right, guys? Regardless, this is definitely not something that we've seen before in a bear market, and it's even crazier if you kind of come back and you look at this, guys. This is the first quote-unquote bear market we've ever had where Bitcoin dominance literally never came anywhere near the levels that it did in any of the other bear markets. So it's definitely something to be watching, and it's definitely something of a little bit of concern, and it's something that we're obviously monitoring pretty closely. Even USDT dominance, guys, and I like to talk about this quite a lot, and you can see over here on the daily. If I come over here and show you guys, you can see we're starting to break down and starting to move down. On the 4-hour, we have now finally come back down and broken back below the 50. We need to hold this. And what I would be expecting, guys, especially because we just had a couple of pretty good days, depending on how things go, expect a bearish retest, and this is what we'd want to see. This thing start to kind of trend down. This thing maybe comes back up and does a little bit of a retracement for, we did have a couple of really good days. This thing does a bearish retest and then rejects and then starts coming down, and then this thing starts making structure a more of a bearish structure where then it comes back up, maybe does it again, rejects, and then this thing starts making higher lower highs and lower lows, and we start getting more of a bearish structure, and then we can start seeing some relief on USDT dominance. If you look at the last time we were in this zone, guys, you can see the zone was kind of weird because we would spike in it and then push back down, spike in it, push back down, spike in it, push back down. But generally speaking, from the time that we made this high right here to the time that we broke out, about 350 days. All right, guys, goes back to the year, guys. Basically, bear markets typically last roughly a year, and this is why I say I think people have time. I wouldn't be rushing. Don't FOMO. Set limit orders. Be stoic. And play this thing the right way. The bear markets are where you build your portfolios preparing for the bear. All right, guys? And if you do this right, this is where the crazy opportunities happen as long as you build a game plan, create a strategy, and you stick to it. And if this is the first time you've ever found any of my content, my name's Coach JM. I've been a digital asset investor for over 5 years. I am the founder of Alpha Syndicate, and I also host all of the Crypto Talk workshops inside of Capital Club. And if you want to learn this stuff, guys, if you want to understand how we combine the macro, the fundamentals, technical analysis, and how we kind of combine all of this together, and then if you're also looking for a place that you can get coached and mentored by people like me, or a place to network with other traders, entrepreneurs, click the link below, guys. We'll see you inside.